It's another day to do business. Welcome to Business Incorporated. This is where we do 55 minutes of a global business. And here's what we have prepared for you on this episode of the program. In South Africa, free basic electricity will begin from July the 1st. In Nigeria, the National Bureau of Statistics says that PMS price had increased 9.75% month on month. And then Zimbabwe counting losses, maize production down 60%. Good afternoon. Welcome to Business Incorporated. I'm Eni John McQuarrie. We start off as usual from the global space. That's oil. Brent crude futures edged up in early trade on Thursday as Israeli tanks advanced into Gaza, while U.S. crude futures dipped on the prospect of swelling oil inventories. Brent crude futures edged up in early trade. And as we see the prices right there for Brent up 0.3% at $85.15 a barrel. While it's on the flip side for the WTI, it lost 0.3% at $81.30. In the United States, we've seen, of course, that U.S. federal holiday, the Juneteenth, that was yesterday. It kept trading activity subdued and also contributing to that. Then we go to metals now. Gold prices hit a 2-week high on Thursday. Interesting, after recent weak U.S. economic data raised market expectations of interest rate cuts from the Federal Reserve later on this year, while uncertainty is still surrounding multiple elections globally, also lent support to that. Spot gold was last up 0.44%, $2,337.70 per ounce, after hitting its highest since June 7 earlier in the session. U.S. gold futures also went up 0.28% at $2,351.50. And last week's data showed a moderation in the labor market and price pressures, followed up with soft retail sales data on Tuesday, suggesting that economic activity remained lackluster in the second quarter. The Fed is looking for further confirmation that inflation is cooling as they stare cautiously towards what most expect to be a rate cut or two before the end of 2024. Let's stay on that, talking about gold now. That increase in the price of gold catches our attention. So let's have a conversation now on that with Dr. Teva Kumeke. He's an analyst with Financial Derivatives Company. Dr. Kumeke, thank you for your time. Do we know what's driving this new high for gold? I do know that, of course, global central banks are turning to gold for their reserve. Is this the major driver at this time?
Thank you so much. Good afternoon. Thank you for having me. Yes, the statistics you just read is correct. Gold price rose to about $2,400 in mid-April. So if you compare that with 5 years ago, that's about 27.15% increase in the price of gold per troy ounce. And compare that with last year, you have about 15.95% increase in the price of gold. We've noticed that these are interesting times. In a normal cyclical economy, you expect that where interest rate is high, inflation is stable, and you expect to have an inverse relationship between the price of gold and the US dollar. But due to certain factors we observe over the past 2 years, we've seen these two commodities move in the same direction. For example, the geopolitical tensions in the Middle East, Israel-Hamas war, and Iran attacking Israel. We've seen rising inflation in other countries and investors looking for safe haven. So we observe that there will be high demand for gold because investors are trying to look at where to stabilize or to shade against or to hedge their investments against uncertainties happening in the global world. So this observe for movements is a way of shielding against any form of losses that may be incurred due to geopolitical tensions in the Middle East and other parts of the world.
Now that it seems we're seeing a loosening trend when it comes to monetary policy, we've seen Switzerland has cut, we've seen Canada has cut interest rates, England has held, but we see that they've hit their inflation target. So perhaps the next sitting there might be a cut also from the UK. Eurozone also had a hold stance. How does this affect this new desire and demand for gold by central banks?
Yeah, and like you said, the US inflation has stabilized to 3.3%, and investors are already anticipating a rate cut in the federal rate, in the Fed rates in the US. This has implications. So we're going to see easing in monetary policy by most of these advanced economies. What that is going to happen is there's going to be a shift from dollar holding for reserve to more demand for gold. So lower interest rates means that investors are going to look for where there'll be higher investments. Gold itself is like a stabilizing commodity, which is not affected much by crisis. So lowering interest rates will lead to less holding for the dollar. Then countries are also looking for how to diversify their investments. So they're looking at, okay, let's have a percentage of our reserve in the US dollar and a particular percentage in the gold reserve. Then, so coupled with all the uncertainties in some of these countries, we expect more demand for gold in the next 2 years. That's our forecast.
Is this enough incentive for countries like Nigeria to, give more attention to mining gold?
Yeah, recently Nigeria announced incentive for mining gold, which is a good thing. Nigeria has joined the Global League of Nations producing gold, like China, Russia, Ghana, and other countries. But we have issues in Nigeria that we have issues of infrastructure. We have an issue of artisanal and small-scale mining and illegal mining. Yes, mining of gold can add to our reserve, but that mining is a process. Mining is different from the refined gold. Are we going to generate the required quality that will meet up with the international standards? So mining gold will be a plus to our economy, but we have to deal with the issue of infrastructure. How are we going to handle illegal? We have issues of illegal mining in so many in the mining sector. Then artisanal and small-scale miners. How do we incorporate this informal form of mining to a more formal mining industry that will add to our GDP and increase the revenue of the citizens, add to our GDP, and boost our overall economy?
All right, Dr. Teva Akumeka, questions that also affect other sectors or other production parts of Nigeria are still unanswered, and we're still looking for those answers. But thank you so much for your time.
Thank you so much for having me.
All right, we're still staying in Nigeria now, where the average retail price of refilling a 5-kilogram cylinder of liquefied petroleum gas, that's cooking gas, increased by 13.75 on a month-on-month basis from 6,521 naira 58 kobo recorded in April 2024 to 7,418 naira 45 kobo in May 2024. That's according to the National Bureau of Statistics. On a year-on-year basis, this increased by 70.12% from 4,360 naira 69 kobo. That's the price that we had in May 2023. Now, looking at states profile, Benue recorded the highest average price for refilling a 5 kg cylinder of liquefied petroleum gas at 8,012 naira 3 kobo, while Yobe was on the flip side, recorded the lowest with the price at 5,842 naira 31 kobo. Still staying with price watch now, but talking about the PMS petrol. The average retail price paid by consumers for premium motor spirits, that's petrol, for May 2024 was 769 naira 62 kobo for a litre, indicating a 223.21% increase compared to the value of May 2023, which was around 238 naira 11 kobo. On a month-on-month basis, the average retail price increased by 9.75% from 701 naira 24 kobo. And for state profile, we see Jigawa State had the highest average retail price for petrol at 937 naira 50 kobo, while Ondo, Benue followed next after that. But on the flip side, we have Lagos, Niger, and Kwara State with the lowest average retails, and lowest there for Lagos, 636 naira 80 kobo. Now, members of the Nigeria Employers Consultative Association, NECA, have met with journalists to share invitation to their third summit, which is slated for later on this month. The Director General of the association, Mr. Adewale Smart Oyerinde, believes that the summit is a meeting place for the private sector to serve as a platform for alternative policy recommendation for the government. The plan for 2024, according to him, is to focus on possible solutions to the harsh spillover of economic reforms, which is still ongoing in the country, and will, according to the Director General, present a convenient platform for the public and private sectors to find a common ground.
Also the co-chair of the summit. The summit is not basically to interrogate those reforms, but basically to deepen or share the nexus between the reforms and the private sector, and how government can actually leverage on the agility, using the words of the team itself, the agility of the private sector to help it to navigate through these reforms and achieve the desired outcome that we plan to achieve. For many of us, we didn't experience the good old days, but we believe strongly that the years ahead can be very fruitful, can be very prosperous for Nigeria, and that we can achieve by actually creating this kind of platform where we can interrogate, we can share perspective, and also guide those in government through the pains of organized businesses and the way that the government can leverage on the flexibility, the dynamism that existed in the private sector for us to achieve not only rapid GDP growth, but a total renaissance, as the word connotes, of our socio-economic life in Nigeria.
Now, yesterday we did tell you how the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, announced an extension to the 2024 licensing bid round registration by 10 days. The Commission Chief Executive, Mr. Gbenga Komolafe, said that this is to allow interested investors to take advantage of the expanded opportunities in this pursuit. Now, let's delve more. There have been reactions following this and similar related conversations. We have Mr. Dan Kunle, as an economist and policy analyst, joins us from our Abuja studio. Mr. Kunle, good afternoon, and thank you for your time.
Good afternoon, madam, and compliment of the season.
Wish you the same. So this extension of the registration should come as good news to stakeholders, giving you a bit of time to rest, to breathe and be able to participate, as Mr. Komolafe said, and take part of the opportunities that are available.
Yes, it's a welcome development to extend the timetable because of the situation currently. You cannot rush such a very huge number of oil blocks in offer. They are quite huge because he had the regulator had put out 7 blocks, 2022, 2023. And those 7 offshore blocks between Badagry and Ondo State offshore, they were not yet concluded as at the time President Tinubu took over. So now he is bringing additional 17 oil blocks after all his preliminary seismic review of the old data. So he's bringing 17 into the basket. So if you add 17 plus 7, that's 24. So the timetable to accommodate all the evaluation processes, the transaction, the bid round, is a very tedious exercise. So I think it was necessary for him to allow bidders to have time to turn around all the documents and check everything, due diligence and consultation across the globe. So it's just ideal. It's ideal. Even though we have no time on our side for the hydrocarbon life cycle, we have no time, but at the same time, we should still do things properly. Yeah.
Well, this now should give Nigerians more hope that we are able to meet up with our crude demand for supply into refineries, which we're expecting. Dangote is already working. Does it directly feed into the supply for the country?
Well, you see, this question, yes and no. Yes, in the long run, medium and long run term, and in the oil and gas sector, upstream in particular, medium start from 5 years, and long term, 5 years like that, 10 years, 15 years. So, because offshore assets, offshore oil blocks like this, the investment and planning period you need minimum of 3 to 4 years. All the seismic, all the data interpretation, all the initial drilling work, appraisal drilling work, then before you get all the FPSO, and then production facility installed offshore. You can just remember Bonga, remember the Eugenia. So you can see you need a frame of 5 to 10 years to achieve that. So in that respect, if the supply, crude supply and gas supply expected from all these assets, if they are to come on stream, it means you are looking at 5, 6, 7, 8 years ahead of you. So that is in respect of this number of blocks he's putting in the market. But the good news is this. There are some of those assets that are already fully explored, but production have not started. The data shows that those assets are very good. So if the winners are able to mobilize quickly, then they can get crude to the market in 5, 6 years' time, because there is no wide horizon for delay anymore. So that is the thing. That is the good news. But the fairly long gestation period must not be taken away. We have to wait for some of these assets to mature between 5 to 10, 12 years because of what I've just told you, the preparations, the technology amalgamation of everything, all the apparatus, the investment decision. So, but it's okay. It will support our local crude supply in the medium and long term. It will.
And we see that recently the Commission had announced some attractive regimes, attractive fiscal regime, minimize entry fees. How are these investors taking this? Because our oil and gas sector has over the years had a lot of risks, that seem to be discouraging. We've seen IOCs leave the sector. Are these enough to quell the fear of investors coming into the space?
Yes, you see, this industry, this hydrocarbon industry from 1958 to date, in Nigeria, we have stayed too long for not carrying out the reform. So after staying too long for not carrying out the reform, the new Petroleum Industry Act 2021 that produce the upstream regulatory institution now has a Herculean job in front of them, because you have to carry out a reform. And this reform has been left undone for years. That is why you see now that the Regulatory Commission has to hit so hard in many fronts. So if you don't create the right environment and atmosphere, create the necessary incentives, investors will migrate away, because the environment globally is looking for where it's appropriate for them to invest. And if you watch carefully, there is a competition in the golden triangle of the hydrocarbon resources of the world. The golden triangle is the Brazil basin, and the Mexico basin, and the Gulf of Guinea basin. If you just draw your triangle, you will see what I'm talking about from your map. So the investment competition in these three golden triangles has been not too favorable for us. So we need to rejig our fiscal regime. Our regulatory environment must reposition Nigeria to attract some of this investment into this deep offshore asset. Otherwise, we will be left behind, and we will not derive much value from the natural endowed resources there. So that is why when I saw that the Upstream Regulatory Commission decided to peg the signature bonus, I was very happy, because when they were doing the marginal field bid round 3 years ago, some of us insisted that they should not put signature bonus. Because you say you want to encourage your local investor in Nigeria to go into marginal oil fields to produce 2,000, 3,000, 4,000 barrels per day. And then you are bidding, you are asking the bidders to pay signature bonus in some circumstances up to $10 million. So where will that investor again now get additional money to develop the field? So you can see exactly what has happened now. Our caution that time that some investors should not go ahead to pay that signature bonus, that they should write to the DPR, then DPR, that they should allow them pay only nominal fee for administrative expenses, while they should be asked to post performance bond over 24 to 30 years, to 30 months, so that within that time, if they don't bring out first oil, then government can cash part of that performance bond. But they refused. They didn't listen to us that time. Today, how many marginal field has come up after that bid round that was administered by the President Buhari's regime? So this is the problem at times, the egg or the chicken. So if you eat both, you are finished. So in this case, the upstream regulator has decided now, which is a very wise economic decision and also a fiscal friendly decision, to say, okay, all these upstream assets offshore for offer, $10 million in the global environment for crude oil is a small money. Okay, so many oil companies can afford to give you $10 million signature bonus for a very good oil block. So now, if that is the signature bonus limit for now, let us stay there. It's good enough. Federal government, I'm aware a federal institution petition that the Upstream Regulatory Commission is going to shorten the revenue going to federal treasury. I mean, this is the problem of alignment. Our political managers and the economic managers must always align weekly on what is going on. If you want higher signature bonus, no investor will come because you want to swell the federal treasury for distribution to the three tiers of government. What will they do with that money when you get it? That's if at all you are able to get reasonable signature bonus compared to that of the President Obasanjo regime, when we were getting $120 million, $200 million signature bonus for oil assets in this country. That is history. You cannot get that one anymore. Anywhere in the world, people are giving oil block free today. So those people petitioning the Upstream Regulatory Commission that they will shorten the revenue of government, they are mixing the point. You cannot eat your cake and have it. It's not possible. You either open up the field and allow investors to come in, or you close in, and then you just go, and then you will not get anything from your oil and gas. Nobody will put his money. So even this 10 million is still too high, but let's just stay there for now, because the assets on offer, there are many. So I hope President Tinubu will begin to see that that philosophy of taxation. Don't tax the cow to death because it will not produce the milk anymore. Okay, so I stop here.
All right, Mr. Dan Kule. Obviously, we can stop there for now. But, I mean, the thing is not just attracting, as you said, the investors, but keeping them there, especially the domestic investors. We actually need them, especially now that we have hopes of refineries springing up in different parts of the country. Thank you so much for your analysis and sharing your thoughts, Mr. Dan Kule, economist and policy analyst.
Thank you. Thank you.
All right, now let's take a break. When we come back from that break, we'll head to the market. And decision. The Bank of England has made its decision. We'll talk about that with Juliana and other things here on Business Incorporated. Join us again. Welcome back to watching Business Incorporated right here on Channels Television. Let's head to the markets now with Anite Edet. Anite, good afternoon.
Yes, good afternoon, Ini. Yeah, okay, so after 2 days public holiday and then the market resuming midweek, but the midweek trading session, it ended in the red, and of course it's picking up from that red at intraday. So the market so far at intraday, still a bit of a profit.
Undecided, we see it's 0.00.
Exactly. And the likes of MTN Nigeria, Nigerian Breweries, FBN Holdings were the culprits for that market being in the red. But the intraday will get a market analyst to tell us more about the intraday numbers. But first, let's talk about the intraday numbers. We've talked about Nigeria's stock market. Now, as for the South African stock market, yes, it crossed into the 80,000 points and still maintained that level. It didn't go lower despite the 0.65% pullback that you see there at intraday. Those numbers will still be changing, and by the end of Thursday's trading session, we'll see where the market finally decides to land at. And on the other side of the market, we see Egypt's stock exchange still from last week, still not decided to open, still on holiday. So that's it for that market. While the Kenyan stock exchange, as at Wednesday, 0.26% in the green. So that's it for that market. And now let's head to Nigeria's stock market, where all eyes are on the investors. Are actually in a frenzy for the combined offer by one of Nigeria's sixth largest bank, which is Fidelity Bank, which intends to raise about 127.1 billion naira from capital raising. And this is coming after the central bank had announced that all the banks in Nigeria should recapitalize and meet a new minimum recapitalization base. So Fidelity Bank intends to raise, will be doing a rights issue of about 3.2 billion shares at about 9.25 kobo, and a public offer of 10 billion shares, ordinary shares at 9.75 kobo. So now we will be having our guest, Richard Akimolado, to tell us more about this. Thank you for joining us, Richard. Hello, Richard, can you hear me?
Hello, Anita.
Yeah, okay, all right. So we have you there. Okay, Richard, thank you for joining us. Now, right about now, the market is in session, but at the same time, very soon we'll be having Fidelity Bank management, and they've opened that offer, which opens today and will be ending by July the 29th. But my question is, why are investors so excited about this combined offer by Fidelity Bank?
Thank you for having me on your show this afternoon, Anita. So, as you know that...
Hello, Richard, can you hear me?
Yes, I can hear you.
Okay, yeah, go ahead. Yeah.
So, as you rightly mentioned, that majority of the banks will be coming to the market, and this is the first bank that will come into the market to raise fund in form of equity. We've seen Fidelity opening their offer today, just like an hybrid offer. They are doing a right issue and also sort of a public offer. So the right issue is coming in at 9.25, while the offer is coming at 9.75. So existing shareholders, they can take the advantage of the price. Currently, Fidelity is trading at It's trading at 10.60. So is investor are actually buying these shares at a discount compared to the current price of the stock now. So I think it's a good one for investors if they can actually buy into the stock at this price. So the discount is actually the benefit for investor if they buy into the offer at the price.
Okay, so Richard, now that takes me to my second question, but still Fidelity, there's just in about 30 seconds. Now, yesterday we saw that that bank accounted for about 1 billion shares in transactions. So the second question is, what impact is this combined offer or hybrid offer going to have on the Nigerian Stock Exchange as well as the banking sector? Will we see, the likes of other tier 1 and tier 2 banks do much bigger than this 127 billion targets?
Yes, you're right. We will see more offers coming into the market. I believe that other banks are actually working on their documentation and approval from SEC and NSC so that they can come to the market and assess the market. So I believe a lot of work are going on the ground, but hopefully by next month, we'll see more offers coming to the markets.
Okay, Richard, so we'll leave it there. And at the same time, we're looking at where the market will end Thursday's trading session, but hopefully in the green. Well, thank you so much for your analysis on our show.
Thank you for having me.
That's Richard Akimoladun with CSL Securities for the market numbers at intraday. Now, let's talk about the Middle Eastern market. Well, Middle Eastern market, still United Arab Emirates, still trading and still in the red for a third straight sessions, although we saw some pockets of green from the Dubai FM just yesterday. But at intraday for Thursday, these two markets are in the red, no thanks to the impact of profit taking on the United Arab Emirates indexes. Now let's see the other side of the market where we see Saudi Arabia still closed, and the other Qatar is 0.26% in the green at intraday, 9,702.17 points for that market. And from there, we move over to the United States, where we see the stock futures. Stock futures are positive, coming from the Juneteenth holiday. So we're looking at this, the positive start for the day, 0.10% for the Dow Jones Industrial Average, S&P 500, 0.41%, as you can see there, and as well as the NASDAQ, 0.61%. Now, all these investors are actually looking at the shares of NVIDIA, which has been in the news. Just recently, it overtook Microsoft, becoming the world's most valuable company, and is not coming too far from when it initially or just briefly overtook Apple as the most capitalized company. Apple is actually has regained that spot, but briefly NVIDIA had overtaken that tech giant. And of course, there's a tech rally, so that the tech market is really revving up Wall Street, while investors will be looking out for other numbers. What to be looking for later, and the investors will digest fresh economic data for the second half of the week, which includes the initial jobless claim figures, as well as the housing starts data for Thursday morning. So Nigerian time, 2:30, US markets will be open. And finally, for Asia, we see most of is a mixed picture there. For the Nikkei, 0.16%. The South Korea's Kospi, 0.37%, and the Hang Seng Index, 0.52%. All these markets, they're reacting to China's lending rate, the 1 and 5 year lending rate, the lending prime rate, which is the Bank of China has kept its 1 and 5 year loan rates unchanged. That's the prime rate serves as a benchmark for most corporate household loans. That's the 1 year lending rate, as well, while the 5 year lending rate serves as a peg for property mortgages in that country. So that's why this market being reacting, kind of a mixed picture there for the market. So that's it at intraday and for Thursday.
Thank you so much, Anita. Well, talking about lending rates, we head to the UK, where the Bank of England has held the interest rates steady even after hitting the inflation target. That was yesterday. We have Juliana joining us now to give us conversations going on around there, and perhaps the next meeting might see a cut in the rate.
Good afternoon, Innie. Yes, perhaps. I think August is still very much on the cards, but I think it's a crushing blow for Prime Minister Rishi Sunak because we are literally just 2 weeks away from the UK general election, where we're expecting a obliterating Tory wipeout. But I think at the moment, Prime Minister Rishi Sunak and, of course, Chancellor Jeremy Hunt, they're looking at the economy to try and rescue some of those votes, because, of course, it was the Conservative government that's overseen this measure of trying to tackle the cost of living, attempting to bring down inflation, and it's down 2%, as you said. Yesterday, the Office for National Statistics confirmed that, which is amazing if you think about it. Just a year or so ago, inflation in this country was at double digits, 11%, because of the measures of the Bank of England, as well as policy as well. It has come down. So finally, prices are at a stable rate in this country. But of course, you can't hit a target on one day and then the next day expect the Bank of England to reduce interest rates. So they haven't, as you quite rightly said. It has come in steady at 5.25%. This is a 16-year high. It has been at 5.25% since August 2023. And Andrew Bailey, the Bank of England governor, in his remarks after that announcement at noon said, look, hold steady, that, of course, it's a good thing that inflation is down at 2%. But we just need to monitor and make sure that it remains at this way, because, of course, there are so many other factors that could contribute to inflation rising yet again. One of those being wages. Good for people who are, of course, struggling and deserve a pay rise. But, of course, if you do have more money in your back pocket, you are going to spend more. So there are fears that perhaps the economy does need to settle for a while just to see whether or not interest rates can be cut. So August, not off the cards, according to economists, but we're more than likely going to look at autumn. How does this play in the UK general election? That, of course, is a massive factor, because the economy, of course, is the key battleground alongside migrants and migration. So on the one hand, Rishi Sunak can at least sleep easy on the fact that, he said he was going to bring it down, and he did, but he didn't get that cut in the cost of borrowing, which would have helped in some of the leafier, more conservative-prone voting areas.
Well, I guess one good thing out of this is politics did not outweigh the economic decision that needs to be taken, because if not, we would have seen a cut. So thank God for that. But what about the market? Yeah. How's it reacting to this hold?
Yeah. Yeah, the markets are in tip-top shape, actually, at intraday, despite the fact that we had some really shocking news from YouGov. Now, YouGov, everybody who watches UK news will be familiar with them, because they are the leading pollster, basically telling us what is happening in terms of the way people are thinking. So they've been really, really popular, particularly because we know 2024 is the biggest year on record for elections. So you would expect a firm such as YouGov, which was co-founded by the former Chancellor of the Exchequer, actually, Nadeem Zahawi, to be doing well. But alas, they are not doing well. £400 million has been wiped off their market capitalisation in London today. And that's because they've issued a profit warning, suggesting that perhaps over the next couple of quarters, their profits will be on the decline. So despite the fact that YouGov are the biggest faller on the UK share index this morning, the FTSE All Share is actually still doing pretty well. So it's up by 0.14%. The FTSE 100 is up by 0.13%. And the FTSE 250, the domestic market, that's up by 0.19% at intraday. In currencies, the British pound trading down against the US dollar by 0.14%, though up against the euro by 0.04%, and up against the Japanese yen by 0.16%, clearly reflecting that data from the Bank of England, keeping interest rates on hold at 5.25% for a 7th month in a row.
All right, Juliana, thank you so much for that. Let's head to Berlin now, where a survey has just been released that in 2023, there was a record high use of fossil fuel. Well, in a world where we're talking about reducing emissions and climate change, isn't that shocking? But let's have Cassandra join us now with the details. Hi, Cassandra. Tell us more about this survey.
Thanks for having me, Innie. The report found that overall energy use is going up, and while fossil fuels are making up less and less of a percentage of that demand, fossil fuel use still grew last year because of that overall growth. Currently, fossil fuels amount to 84% of the energy mix for non-OECD countries. That's according to the Industry Statistical Review of World Energy Report, which is out today. Now, another piece of bad news is that the world also hit a record high of 40 gigatons of CO2 emitted. I looked up how much a gigaton is, by the way, and just 1 gigaton is the same weight as 6 million blue whales. So that's a massive amount of carbon dioxide that was emitted in 2023. The head of the agency that conducted the report said that they hope that the information will help governments, world leaders, and analysts move forward with clear eyes about the challenges that lie ahead. The chief executive of the Energy Institute said that there is a sign, that this is all a sign that the demand for fossil fuels is peaking, but whether we see the top of this mountain has really yet to be seen. The report notes that since the year 2000, emissions from energy have increased by 50%.
And I mean, at a time like this. But let's look at the markets now, see how that's doing.
Well, European shares opened higher on Thursday, boosted by rising tech shares. The Pan-European Stock 600 gained 0.3%. Tech stocks, as well as construction and materials, were leading gains, both rising 0.7%. In Frankfurt, the DAX was up 0.4%. The Paris CAC 40 index rose 0.3%. Meanwhile, across the channel, London stocks opened flat, with the blue chip FTSE holding its ground earlier this morning.
All right, Cassandra, thank you so much for that. Let's come to the African continent, beginning with Nigeria. The National Agency for Food and Drug Administration and Control, NAFDAC, has reiterated its commitment to enforce the ban on sachet alcohol and codeine syrup to prevent abuse and ensure public safety. The Director General of NAFDAC, Professor Mojisola Adeyeye, made this known in a statement on Wednesday.
For the sachet alcohol, there was a 5-year moratorium, meaning we gave opportunity for companies to readjust their manufacturing, their finances and whatnot, to phase out 2 types of packages, sachet alcohol and PET bottles that are less than 200 mils. That moratorium was signed in December 2018. So when you count forward 5 years from December 2018, it took us to January 2024. After that, we started enforcement. The ban on codeine took place 2018, May 1st. And it is codeine containing syrup that our children were abusing, mothers were selling at that point. That was about 6 years ago. That ban was for codeine containing syrup. The ban is still in place.
Away from that, national free basic electricity in South Africa comes online from Monday, July the 1st, 2024. This follows the National Energy Regulator of South Africa's approval last month. The national free basic electricity rate is the threshold at which local municipalities compensate Eskom for free units to qualify customers. At the NERSA meeting that was held in May, a qualifying rate of 194.40 kilowatts was agreed upon. According to Stats SA, 22 out of 100 households in South Africa are considered indigent. That means they are too poor to pay for basic municipal services, and this includes water, electricity, and refuse removal, and would therefore qualify of indigent benefits. Furthermore, it's the type of home that National Free Basic Electricity is aimed at. Members of the qualified households have to contact their local municipality to see if they qualify for the indigent benefits. Homes are then identified by local municipalities, who in turn alert ESCOM through a list of beneficiaries. From South Africa to Egypt, where mechanized exports soared by 9.8% year-on-year in the first 5 months of this year to reach $16.55 billion. That's according to one of the officials. Exports increased every month over the period, underscoring the North African country's ongoing expansion in global trade. The minister stated this, that's the Minister of Trade and Industry, Ahmed Samir. Notable items that have contributed to this include fresh and dried citrus fruit valued at $721 million, wires $351 million, and manufactured petroleum oils at $186 million. Key export sectors also include building materials, that's about $3.86 billion, the food industry, $2.64 billion, chemical products and fertilizers at $2.49 billion. Agricultural crops also contributed to that at $2.26 billion. In Zimbabwe, it's not so good because maize production will drop by 60% in the 2024-2025 marketing year because of extreme drought associated with the El Nino weather phenomenon. This is according to a report by U.S. Foreign Agricultural Service, FAS. The massive year-on-year decline, which prompted Zimbabwean president to declare a state of disaster, is the result of more than half of Zimbabwe's planted area being wiped out by drought. Production is forecast at 636,000 tons this year, compared with 1.5 million in 2023-2024. Domestic consumption is forecast at 1.9 million tons. Zimbabwe will have to import more than 1 million tons of maize to meet local demand. And now we head to crypto and see what's happening there. Looking at the numbers, we see that Bitcoin is in the green this afternoon, even though we see well, the numbers may not be looking so attractive, talking about the value there, but it's in the green. It's up 1.55% this afternoon at $66,367.28, and it gained 1.55%. Ethereum is still in the green, still doing well, following, of course, that news of the investigation being over, at least for them. So we see investors' confidence being boosted, and they are turning the way of Ethereum. Cardano, a lot of green, more greens at least than red right there. But the story that catches our attention at this time is the stable coins. Yesterday, Ladi did talk about it. The altcoins was yesterday. It's the stable coins, they're getting attention in the EU countries. Let's find out more about this with Rume Ofi. Rume, good afternoon. We hear that soon it will be a crime to trade USDT in EU countries.
Yeah, good afternoon, Ini. Nice to see you again. A whole lot of stuff are happening in the EU right now, and for jurisdictions where there are restrictions, so they are being categorized to be unregulated stablecoins and regulated stablecoins. So for unregulated stablecoins, they are obviously not going to be trading in the EU's jurisdiction. There's something called market in crypto asset. That was a bill one time, now is now a law. There is now a 2.0 of it that has to do with stablecoins. So stablecoins are more or less like the fiat, peg 1:1 to the dollar. I'm very sure a lot of people are very familiar with it. But the EU is coming to see that there are certain regulations that you must go through, else you will not be allowed. And I so love the fact that the EU is really, really focused on stable coins issuers to issue or platforms to trade euro, which makes a whole lot of sense, because at the end of the day, if a lot of people prioritize the US dollar, it becomes a problem for the euro. So platforms have been given it. All of these framework are going to be implemented most likely by June 30th. So platforms that don't align to that are going to be finding themselves in a very tight situation. For example, the USDT CEO, Polano Adraino, has actually said that it's a problematic issue for them, as well as Binance CEO, Richard Teng, has said that they are going to make sure that they're going to restrict certain unauthorized stable coins, but are going to make it restricted most likely from European citizens, most likely. You know, so also Cochrane and OKS, which is also one of the biggest exchange platforms, are also saying they are going to be doubling down on that. Some stable coins are not going to be trading on their platform, and it's a big issue right here. The MiCA bill is saying that issuing of stable coins and minting of stable coins will be only done by banks, and as well as EMI, which are electronic money institutions. So it's a very serious situation, but it's good that a lot of people begin to get selfish about their jurisdiction to, if possible, strengthen their indigenous currency. And I'm also thinking that the ECOWAS member states, since Nigeria is heading that, should come up with something that protects all of the member states, and also Nigeria in that line. Thank you, Ini.
Yeah, well, bringing up ECOWAS, I mean, we haven't even agreed on our trade and payment system. We talked of ECO, we have not agreed on that. So, I mean, going all the way to cryptocurrency. But I'm just wondering how the residents in EU, because we do know, I mean, these stable coins are being used as a hedge, you know, when, you know, you want to take some decisions. Do they have an alternative to use once this come on board?
I think in EU, we don't have that massive turnout on stable coins being used as edge, as against third world countries. Also, okay, let me use the most specific, like Africa or maybe Nigerians, or those speculating on the naira, trying to use that as an edge. For those in the EU states, they more or less see stable coins as utility, right? Because most times it's easier to use stablecoin to make purchases or buy other cryptocurrencies, as against in our climes here, where people who just buy stablecoin and hold it, they speculate on it for the value of the naira to be affected. It's not done that way. Stablecoins are used for purchases. They are used to buy large amounts of cryptocurrencies in that way. So when this happened, I think it's going to give them leverage. Rather than use the USDT, Theta, which is the company actually issuing that, they will be using most likely the European stablecoin and EU-backed stablecoin. So some of these stablecoin companies are going to most likely switch to bringing stablecoins that are pegged to the EU,
okay,
for them to be able to transfer.
Yeah, and I'm sure that's what the EU is aiming at, you know, at least let it be their currency that, you know, is in operation. But thank you so much, Rume, for sharing your thoughts with us this afternoon.
Thank you, Ini. Always a pleasure.
All right, so that's it on the program. Thank you so much for being a part of this, another episode. We have a final one tomorrow. We'll try and make it better than today. But you can always watch this episode and older episodes on our YouTube channel. I'm Ini John McCall. I'll see you tomorrow. God's grace.